there's very few securities that have done as well as Palantir over the last year. The company's up over 200%. And so I want to understand exactly where the company's valued at today, and is it still somewhat undervalued? And so as you guys smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. Now, recently a lot of new people have been coming to the channel, and so hit that subscribe button and that notification bell to be notified when future videos come. Now, when it comes to Palantir, this is a company that, you know, a lot of people consider more of like on the hype stock train, blah, 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 blah. But when it comes to understanding commerce, business, and the security markets in general, what I try to do is personally, just on my own, I try to understand as many of the opportunities out there as possible, try to understand as many of the companies as possible, even if I don't intend to ever invest in them. And, you know, Palantir is one of those where I haven't made an investment in the company. I don't think I'm going to make an investment in the company. In fact, I'm pretty sure I'm not going to invest in Palantir. But what I really wanted to show in this video is that as value investors, we should still understand what these companies are all about, because, you know, you could one day find one of those hidden opportunities in these types of new technology, forward focused technology areas. And so I wanted to make an admission first. So here's a chart of Amazon, and back around, it was somewhere in between 2003 and 2006, somewhere around this area, I was sitting in a cafeteria and I was looking at Amazon, and I failed to try and understand the business. And really what I meant there was I passed on the security because I did not make a valiant effort to try and understand the business. And, you know, if you were to really think about it, you know, it might have been a little bit early at the time, but we were really moving into a world where ordering products from online were becoming more normalized. I mean, at the time I was ordering, and in fact, I was selling things on eBay at the time as well. And so, you know, Amazon at the time was more predominantly focused on books. Some of the earlier, I guess some of the older people that follow this channel would know that Amazon, I think, originally started with just books. And then at that time, around that 2003 to 2006 time, they started branching off into other products. It was still somewhat expensive to ship them to your house, but there was a natural convenience there, especially if, you know, the grocery store was 30 minutes away, and or sort of like you were like less mobile. It just made a lot of sense to have these things delivered. So I saw go in hindsight, I see a use case there, but the mistake I made was I just didn't really try and understand the business model. And then look at what it's turned into. Now, I'm not saying that, you know, Palantir is going to be the next Amazon or anything like that, but what I am saying is that as value investors, we should at least try and have a reasonable understanding of all businesses in the universe, especially ones that continue to come up in the news. And so this is what I'm trying to do with Palantir. And so you can see that Palantir, the shares did really come down pre-2023. And then, of course, they surged back up 212% thus far over the past 52 weeks. So, you know, there was a lot of believers in the company, sub $10 per share, and they made quite a bit of money. And so what did their latest earnings results look like? Well, notice that their adjusted free cash flow, I guess this is the area that I'd probably look at. I'd also look at revenue. Notice revenues are up almost 20% year over year, and adjusted free cash flow is up 33% to $730 million. And it doesn't look like growth is slowing for the company at all. They're expecting another 20% increase at the midpoint of their guidance in revenue, so top line, and a 23% increase in their adjusted free cash flow figure. So that's nothing to shake your head at. So I would say, at least just with this guidance and this recent performance, it makes sense to try and understand the business. And I say that even if you're not intending to invest in the business at all. And, you know, I think a big part of their business is just defense spending, but notice that they're really focused on US commercial businesses. Their US commercial businesses are their fastest growing segment, I would say. And so in their US commercial market, their revenue actually increased 70% in Q4 of 2023. And I think that's pretty insane. And, you know, they expect a revenue growth rate in 2024 of 40%. So that's double their overall revenue growth rate from commercial. And so this is very interesting to me, because now you're becoming a company that's essentially less reliant on defense spending. So that becomes very interesting. And so the question I have is, what exactly are you selling to the commercial space where you're growing so fast? And they're saying, of course, that the demand for large language models from commercial institutions in the United States continues to be unrelenting. Very interesting choice of words there. And their momentum with their AIP is now, or their artificial intelligence platform is now significantly contributing to net revenue and new customers. So, step one here is that I would want to learn more about this before I went forward. And I'm not going to do that on this video, but this would be one of the things that I would take away. This actually is from their CEO's letter. So, as I would kind of want to know what the overall market looks like if they're expecting to grow at 40% and they're using the word unrelenting. How do I forecast this segment out? That'd be very interesting. That'd be something very interesting to investigate. I think just from my capabilities, just because large language learning models and that sort of stuff is not really in my wheelhouse, I would probably immediately pass as making this company a candidate for investment. But on the back burner, this would be something that I try and learn more and more about, because there are people on this that watch this channel that do invest in Microsoft, in Google. And I'm sure they are monetizing large language models as well. And so, just between these three names, it would be important to sort of understand this stuff. And if you are incapable of understanding, and I fully believe that I'm in the boat that probably at the end of the day may not be capable of understanding that stuff, it would probably mean that I shouldn't be investing not only in Palantir, but also in Google and in Microsoft for those reasons. But of course, it's probably less important in those companies, and we probably understand their segments, their material segments a little bit more, especially Google, where primarily it's ad spend. So it probably makes sense to not discount the fact that you understand that space. But for example, how do these new technologies impact their current businesses? Those are questions that are tough to answer. And so when I think about Google, when I think about Microsoft, the future is a little bit blurry to me. I don't know what it looks like to you guys, and you guys let me know in the comments below what you see the future looking like in terms of, call it the top 4 products for both Google and Microsoft. Now, in that CEO letter, they're also focusing on profitability. And so they're saying that, they had 5 consecutive quarters of positive net income, which is really interesting and nice to see. But notice that for 2024, as a result of their sustained and growing profitability, they see a path towards approximately 800 million to 1 billion in adjusted free cash flow. And I just threw that over their number of share counts that they have, and I see that it means around 40 cents per share on a high level basis. And so, what does that mean overall? Well, the company's trading at $25. So if you were just to take $25 divided by 0.4, you're looking at a company that might be trading at 62.5 times earnings, which is not cheap by any imagination. And I do want to show you something funny that I saw in the CEO letter. This is how he ends it off. As a result, we remain one of the few companies from Silicon Valley whose interests, both financial and geopolitical, remain fundamentally aligned with the American and global publics. So I find that very interesting. So is he saying that, the rest of Silicon Valley or many of the names in Silicon Valley are just not aligned with the public? And very interesting comment. I suspect that this guy doesn't have a lot of friends in the Silicon Valley space, which is completely fine. A lot of the people and companies in Silicon Valley tend to be more left-leaning. I don't know if they would be sort of like leaning into government contracts, especially defense spending contracts. And so Palantir might just be on their own as it relates to that space. Now, I wanted to see what the consensus EPS estimate is. And, it's very close to kind of like where I got on the free cash flow per share metric. And so, you're looking at around 40 cents per share in 2025, which means that the company is trading at around 63 times earnings. If it comes in at 32 this year, it means that the company's trading at 76 times earnings. So, I would rely on these because they have more analysts putting a price target. I would rely less on the 2026 number. So, somewhere between 65 and 75 times earnings. So it just seems a little bit expensive. at the moment at its current share price, but you could have made an argument at sub $10 a share, which is where it was in early 2023. So if people were piling in at sub $10 per share and were able to see this, kind of makes a lot of sense. But you'd also have to understand the business, which I don't, admittedly I don't, and understand the sustainability in the operations. Once again, is something else that I just don't understand. Now, here's something else that I saw on the consensus revenue estimates. Notice how they're growing very fast. So my suspicions are that the EPS figures, they might not be growing at 20% a year. They might be growing higher than what the consensus expectations are, especially if the company is able to maintain or increase its profitability. And it just seems like the company continues to increase its profitability, and it may likely benefit from economies of scale. So my suspicions are those EPS estimates might be a little bit muted, and they might come up over, the next month or so, or maybe the next couple of months as the company continues to release earnings. We'll see how that plays out. And the last thing I wanted to point out is, if you've been on this channel quite often, we spend a lot of time looking at the balance sheets. This seems to be a very clean balance sheet. They have around 3.7 billion dollars of just cash and marketable securities. I think that reflects, their market cap is around 53 billion. So deduct the potential excess capital, and you're looking at a market cap of $50 billion. And so that's kind of where this is. And so $50 billion over $1 billion of free cash, you can see where I would argue the valuation is a little bit rich. However, if you believe in the story and you believe that this thing is going to continue to increase at a high level or a fast rate, then 50 times earnings may not necessarily be expensive if you expect, the EPS to grow at like 30 or 40% a year. And so overall, just based on my analysis, I realized that I got some homework to do, especially when it comes to understanding what the commercial market looks like for this company. And so that's where I'm leaving my analysis for now. I'm going to try and spend more time learning about that, but I just wanted to throw out a video. And really the whole purpose of this video is that just because the company is potentially out of our circle of competence, we shouldn't just stop. We should really try and investigate, just put a honest effort into try and investigate the business. Hey, you might end up investigating a business that you actually do end up understanding. This one, I don't think it's for me, but I want to hear from you guys. Is Palantir for you? What price did you buy it at? Where do you see it going? Where do you see the growth rate? And where do you see the next leg of growth coming for them? Their CEO highlights the commercial space, but do you see a next leg of growth in the defense contracting space? I'm very interested to know what you guys think. And so let me know in the comments below. Now, the other thing is if you want to get an idea of the companies that I feel like I understand, I have a tracker which tracks the price to intrinsic value of many companies that I find interesting, and you can access all of that at the lower tier of our Patreons. And of course, if you want to join us at that higher tier, which is an epic live presentation every month, you feel free to join us at that higher tier. And once again, if you feel like you're not getting any value from the Patreon, message me in the first month and I'll completely refund your money, because I don't want to take money from anyone who doesn't experience value. And so I'll leave it there for you guys, and I'll see you later.